Hello, everyone. Well, Fed Chair Janet Yellen's testimony to the Joint Economic Committee yesterday was much awaited, but settled nothing. By the close, the day's range was actually narrower than normal for the major currency pairs. She largely stuck to the text of the FOMC statements and gave no new clues as to what the committee would do and when they would do it. The implication is that the FOMC's decisions depend on the data, which really doesn't put us in a much better place to predict the path of rates than we were before. She did say that she favors reviewing the labor data over 3 or 6 months, which may be why the market did not respond strongly to the better expected April non-farm payroll figures. And she noted that the labor market has, quote, improved appreciably, which may be why the dollar didn't make any new lows for the year on her remarks. Basically, we're back to watching the data and waiting. My view is that the U.S. data are improving, and as a result, I expect the market to begin moving up its expectations for rate hikes in the U.S. But this rethink will only occur gradually over the next several months. Actually, Russian President Putin may have had more impact on the markets yesterday than Yellen did. Putin called for separatists in southeastern Ukraine to postpone their referendums on independence. Moreover, he relaxed his opposition to Ukraine's plan to hold a presidential election. It appears he's trying to steer Ukraine towards decentralization through a mutually acceptable diplomatic framework, which would be much better for the markets. However, Western authorities said they saw no sign of a Russian pullback from the border. Talk is much cheaper than action. Nonetheless, the ruble was the best performing currency that we track. I'd expect to see a continued improvement on risk sentiment based on hopes for peaceful resolution, subject to change without notice. That should be good for the commodity currencies like the Australian dollar, and negative for the yen and Swiss franc, as well as gold and palladium, which are down sharply this morning. Today, as I'm sure you know, we have 3 central bank meetings: the ECB, the Bank of England, and the Norges Bank. I outlined my view on these meetings on Wednesday, and so I won't repeat the analysis in depth. Long euro positions have been cut since the peak in March, but they still remain relatively long, meaning that the market's probably anticipating no change today. So, given that I expect no change either, I think the likelihood is for less volatility than usual on an ECB day. Probably there's more room for action in the Norwegian krone today. I think the Norges Bank could change its tone to be more optimistic, which might boost the NOK. The Bank of England should be a non-event as usual. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, Global Head of FX Strategy at IronFX Global, wishing you solid trading.